Hey guys, it's David and welcome back to my channel. I'm not going to show you my face, and honestly, that's the point. In this game, your face doesn't fill a single account. The tape does, so let me show you the tape instead. I've been trading order flow on the S&P 500 futures for years, reading absorption, the New York Open, where the real money is actually getting filled. Not indicators, not predictions, just what the market is doing live. Back in 2020, I co-founded a trading academy with my partner, Antonio. 5 years later, we've trained 5,000 plus students. Our people have been funded over $6.5 million in prop capital, and I've personally managed north of $2 million on my own funded account. Over the last 14 months, 286 trades plus 37.75%, profit factor 1.23, worst month included. I don't hide the red, I audit it. I'm telling you this not to impress you, but so you understand I'm not a guru with a course. I'm a trader who happens to have spent 5 years figuring out why 90% of people who know what to do still can't execute it. And I built a semi-automatic model to close that gap. That's who's talking to you right now. Today, I'm going to be showing you guys something very, very powerful. We're going to be finding the direction, the bias, using only the daily chart. That's it. We're going to keep it as simple as possible. Let's hop right into the video. Okay, so what do we have in front of us right here is quite simply just a bullish candle. So as you guys know, we have the opening price being down here. We have our closing price being up here. So what essentially this means is price opened up here. And then we ended up closing at this price. And of course, within this candle, we have the low printed and the high printed, okay? Otherwise known as your PDL or your PDH. Quite simple, nothing too complex, but I really want you guys to focus on the low and the high of the day. Everything else is irrelevant for now, but I want you guys to focus on, again, that daily low and that daily high. Okay, now we have in front of us. This is going to be a bullish example. Just kind of going over what we just went over on the previous picture, the previous diagram. We have that daily high and that daily low. So I've left the daily low marked on for us, okay? And I've dragged that low over and brought it over to current price, to live time. This candle is what we've already talked about, the one we've already described. This is again going to be for a bullish scenario. We have the low marked out, you drag it over to current time. Now, the current trading day. This is the day you want to be focusing on here because that's the day that you're going to be trading. If you determined a bullish bias, okay, and you want to be buying the market, all you want to do is wait for price to trade below that daily low. Once we do that, you simply want to go into the lower time frames and look for entries here. And essentially, you can ride it all the way back up to previous daily high. So we can actually mark that on here. This is going to be your PDH, okay? Your previous daily high. The reason why this is so powerful is because it doesn't matter what strategy you do use. If you end up finding a bullish entry model or just a bullish entry signal of some sort, you take that entry below previous daily low and you can actually even hold this up to previous daily high sometimes. And that will naturally increase your RR drastically. And of course, if your RR increases, the profits will increase. However, there's things to take note of. If you do end up catching a trade below here, there's also opportunity most times to catch continuations throughout the day. And again, you take these trades and you hold it up to previous daily high. I'm going to remove some of these markings to keep these things as simple as possible. And we're going to talk about the current trading day. Just like we spoke about before, we have our opening price and our closing price. So in this example, price opens up here. We trade all the way to the downside. Look at this wick. We trade all the way to the downside. We spike below daily low. There you go. That's your signal. Now you want to start looking for your buys back up to the upside. I know there's probably some questions where what if we don't run the daily low? Simple. We don't trade. Now, if we do trade below it, in this scenario, we do. Now, again, you want to start looking for those long positions back up to the upside. And eventually, for the most part, you can actually try and hold it to previous daily high as well. Okay, so now we have a bearish example in front of us. We spoke about the bullish, how we can buy below the PDL. Now, it's going to be the exact same thing on the flip side. This current candle, I've left on the daily, high marked for us. You drag it over. This is the day you want to be focusing on. Imagine you want to be selling. As soon as we start trading above previous daily high, that is your signal for us to start going short. And again, a great confluence to increase the RR, to increase your targets, your profits as much as possible, is you can actually look to try and target previous daily low. So that would be called essentially your daily to daily kind of play. And don't be alarmed. Don't feel FOMO. If you don't catch the high, you can try and catch continuations within this candle. Of course, you need to bump down a couple of time frames. So this is the daily time frame I'm showing you. You need to go down to the 4 hour, the 1 hour, and you'll be able to find a continuation of some sort. and ride it down to that PDL. And that's very important. Once that daily to daily is complete, so as soon as we trade below that PDL, this whole setup, this model is now concluded, right? And you have to wait for another one. As soon as we spike above this previous daily high, again, your entry signal to go short. Maybe you catch the high, or maybe you catch a continuation and you look to target that previous daily low. Okay, now I have a piece of price action in front of us here. This is going to be a gold chart, XAUUSD. And again, the daily chart, we're not going to focus on entries. We're not going to focus on none of that for now. I'm just going to be showing you guys the power of this model, daily to daily. Doesn't even actually have to play out to the daily to daily, but it's just a great signal for you to take a trade in the opposing direction. What do I mean by that? We have this bullish candle closure right here. So if I plot on that high, for example, if price trades above it, you could start looking for those sells back down. And in some cases, not all cases, but in some cases, you can actually target, which we were talking about before, that PDL. You would look for that sell above the high and then that breakdown. And again, in some scenarios, back down to the low. So let's see what happens here. Look how this candle and these are again, these are the plays you want to be focusing on, because when you catch the daily to daily and it actually plays out from high to low or from low to high, these are massive, massive trades. So in this example, let's talk about what happened. We had price open up this bearish candle. We opened up here, we spiked up and we printed this high of the day. Look at this high right here. We took out previous daily high, just like we spoke about on the diagrams. Boom, this is your entry trigger right here. You want to start going short in these regions. And again, look how we spike above PDL, and look, no surprise, we we spike above PDH, and then we hunt for PDL. Now let's continue with price action here. Let's see what happens. The next day opens up. What a big surprise. We spike out previous daily low. And look at this move to the upside. Even if you don't catch the trade all the way back up to the high, this bullish candle is more than enough. From low to high, you're looking at 1,000 pips, I believe, to the upside. Incredible opportunity. Again, you don't even have to catch it all the way back up to the high. Just this candle enough if you focus on just catching this daily range. More than enough opportunity. Now, what happens after that? We actually trade higher. We don't take the high out completely. We leave this for the future. We go short and we take out a previous low here. Check what happens now. The same thing over and over and over. Wow, what a big surprise. We trade lower. We spike out. In this case here, this is Thursday. Thursday spikes out Wednesday's low. We have Wednesday's high still intact. Of course, we have the possibility of maybe even running for highs up here. But in this daily model, this daily example, we have low getting taken out, Wednesday's low and Wednesday's high still intact. Next candle comes in. Boom, we take out Wednesday's high. And from low until Wednesday's high, look at the pip opportunity. 1,600 pips in a day and a half. It's incredible opportunity. So start focusing on this. Naturally, if you start selling above daily highs and buying below daily lows, I can promise you as well, your strike rate will go up massively. Okay, and now we have another example. This is going to be on EUR/USD. So I'm kind of going through a bunch of different assets, showing you guys this happens across the board, everywhere. What do we have in front of us right now? Some things to plot on. We have highs left. From the left-hand side, I'll just plot those on, drag them over to the future. This is Thursday's candle. So imagine you're approaching the chart on the Friday, right? And you're looking to trade on the Friday. And we can mark on, look, we have Thursday's low down here and we have Thursday's high up here. Let's just say, for example, right, we can try to frame this out beforehand. We have Friday opens up, we spike out Thursday's high, maybe even the highs to the left-hand side. You can look to try and catch this move back to the downside. And as an added confluence, you can look to target previous daily low, which would be Thursday's low in this example. And lo and behold, if I play this candle out, look what happens here. Just like we talked about, we have price opening up all the way down here, we run all the way bullish. Look at this wick. We spike above previous daily high. Also take out a high from the left-hand side. Boom, this is now entry signals for you to try and go short using whatever entry model. And this is again why it's so powerful, is because you don't need a specific strategy to trade this. This model, it's universal to any system, any strategy, any entry model you use. So you can add it as an added confluence. So again, we trade above Thursday's high, we take out this high from the left-hand side, and then we go short. And what can we target? A great target in this example here would be that Thursday's low. And just to give you guys an example of what you can catch sometimes in a single day. Look, from high to low, this is 90 pips on EUR/USD. And that is a great move for a single day of price action. Okay, so now we're going to be moving on to AUD/USD. And this is going to be a great example of patience. And sometimes that's going to be required. Actually, a lot of the time that's going to be required. But in this specific example, I'm going to be showing you the importance of patience. So let's say this is Thursday, this is Friday. Well, actually, let's just say you showed up to the computer on Friday. You had Thursday's low marked out. Friday, look at the candle. We never spiked out Thursday's low. So you're like, oh, no trade opportunity. And that's fine. So you're going to wait for Monday. And let's just say Monday did open up at this price here and we spiked below the low. That would be, again, an entry signal for you to go long. Using the lower time frames, you could refine that and try and look for that continuation back up to the highs. And if I grab Thursday's high, boom, this could be, again, a possible target on the higher time frames, of course. The next candle opens up, and again, this is going to be Monday. So imagine you open up your computer on a Monday and price goes short, and look at that. Beautiful. Again, it's so simple. We have price trading below the daily lows. So now you can start looking for that lower time frame entry within this wick. And if you're able to catch something, you hold it. You can hold it all the way up to the previous daily high sometimes, and again, you can capture that whole daily range. This is AUD/USD moving day. These are the moves you guys want to try and focus on catching, okay? The in-between scalps, sure, you can take them here and there, but if you look for those daily ranges to try and catch that low to high or even that high to low, you will see a massive difference, not only in your profits or your performance, but in your discipline. All right, now we're going to be into another example again, showing you all how this model, this idea, this system can be applied to all assets, right? So this is going to be on USD/CAD. We're on the daily time frame. Look at this big bearish closure we had on a Thursday. So again, imagine you show up to the computer on a Friday and you have Thursday's low marked on and even Thursday's high plotted on. And you're waiting for price to trade below Thursday's low. Then you can start looking for your long entries back up, okay? So we have the high and low marked out. The next day opens up and check this out. We spike the low. And actually, this is a good example. This is something good that we can talk about here, is we spiked the low on Friday and we went long, but not a whole lot. And that happens sometimes. You won't have the whole daily range solidified, completed in a single day of price action. It takes time sometimes, right? So again, we spiked below Thursday. We still have Thursday's high intact, so that's something to keep note of. Then Monday opens up and we get a great bullish candle to the upside, so rejecting the lows. If you were able to buy below Thursday's low, you can hold on to that position. And then, lo and behold, I believe the next day, we don't hit it yet, and then boom, big bullish candle. This is a perfect example of patience. Sometimes that entry to target doesn't happen in a single day of price action. Okay, in this example, it took us 1, 2, 3, 4 days, almost 4 days. And again, entry below previous daily low, and you could target sometimes that previous daily high. And of course, if you have other ways of taking partials, but this is an added confluence, and that's the daily to daily method. Buying below those previous daily lows and selling above those previous daily highs. Simple, but powerful. Now here's the thing. Spotting these levels by hand takes reps. So I built a set of semi-automatic models that map out the bias and the key levels for you. The exact same ones I use every single day. If you want them, they're completely free. Just tap the link in the description, grab my models, and start trading the daily to daily setup on your own charts. I'll see you in the next one.